Hi, welcome to the Market Alert for Friday the 8th of September 2017. So in the pound, very quiet to start off with yesterday morning, and the market broke as we got closer to Draghi speaking. For some unknown reason, the market decided to rally beforehand before going back into a sideways move here. And if we look here at 14.15, this is just as Draghi was in mid-float. And again, you don't want to be in the market when the central bankers are speaking. It did speak for some time yesterday, and then the market came lower, and then moved back to the upside when he finished, and then moved back lower again to find a level thereafter. So obviously the euro was up and down during yesterday. In the daily chart, we've got the pound moving higher on the overnight. The fib numbers that we've had drawn in, we had this one that we looked at yesterday. The market drove through this, and on the overnight the market's already through, just trading up to the 131.485, which is interesting to see that the market is actually marching higher again. Let's just have a tidy up here and get a clearer picture of where we're heading. Let me just draw that back in from the high down to the low, and just get rid of the 62. So there's a clearer picture of where we're going, and we'll just draw in the off the high of that bar as well, and then just compress it so we can see it more clearly. We've also got another high here, which we've got going back all the way to when we had a sell-off in this area here as well. And in fact, it's well worth marking up this one off here just to see. And there we go. So let's just scroll back. Right, so now that's all in there. So we've got this one here, 132.669, and then 134.39 as well. So just to make sure we don't lose that, we'll save that as well. Right, news-wise today, what have we got? Goods trades balance 930 for the UK, manufacturing production as well for the UK. Outside of that, there is absolutely nothing else today, so it depends how the other markets are going to fare. And moving on to the Dow, this is the live recording from yesterday. The market started off moving higher, and interestingly enough, I don't know whether you've noticed the pattern of late, but when the market moves higher in the first part, it generally then reverses and moves lower, as it did on Tuesday, Wednesday also, and then yesterday doing the same thing as well. The market then puts in a sell signal. The trade stopped out with a 26-point loss. The market then drives through the scalp, and that's a cue to start trailing the stop when you get the market driving through, and you'll see me trailing the stop down there. And at one point you can see there's, if I just come back a bit, we've got 54 points on the table here, but I'm just hoping it's going to be one of them days when it drops 200 or 300 points, but it doesn't turn out to be the case, and the market comes back and takes it out for a 28-point profit there, recovering the loss in the first one. Then had another sell signal after the crude oil inventories. This one also just trailing it down. Even though the market came down to the scalp, it was worth just hanging in there a bit just to see if it would gather a few more points. And there was plenty more on the table, but again the stock market started to go sideways. There we got 43 points at this psychological level. We know that these levels are going to find support. Also, wanted to bring to your attention is here as well. If you look at these individual grey lines, obviously then it's divided into fours, 25, 50 and 75%. Well, we know 76% is a major area of support, and you can see how the market holds this area, and also through here. Whoops, wrong one. Let me just get rid of that one. And also through here, and then eventually it breaks through and then finds support at this major line here. So again, you can use these areas for support as well. You see how the market then is brought back. And then I sent a note out to say forget the rest of the session because it's going to go sideways, and certainly that's what it did. And then of course the market came back later on in the evening there. Right, let's have a quick look at the implied volatility. And on the implied, this moving higher for yesterday, as you would expect the market to do so, with the market moving, or the underlying market moving lower. So from 886 to 929. So again, still in the upper part, above the 8% there on the implied volatility. So we'd expect that for yesterday's trading session. Right, that'll do it for today and for this week. Moving into the weekend, have a great weekend. If there's anything to report today, I will let you know. Again, keep in mind that the market could be fairly quiet. All the news out at 9:30 this morning, nothing else to report. And no doubt the focus is going to be on Hurricane Irma as well, as that heads towards Florida. So we'll see how that has an impact on the market. Also, yesterday, Congress agreed with Trump, much to the consternation of the Republicans, to postpone the debt ceiling vote until December the 8th, as I mentioned also yesterday. So that's now more or less, we'll pass the bill today apparently. So that's cast in stone. Right, that will do it for this one. And I say, as ever, thanks for watching. See you in the next one.